Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be breaking down today's market action for you. Buckle up because we've got a lot to cover, from a rough jobs report shaking things up to skyrocketing oil prices amid geopolitical tensions and some standout movers in the market. Let's dive right in and make sense of what's driving Wall Street today, always with an eye on how this fits into your long-term investment strategy. First up, let's talk about the broader market. It was a tough day across the board as major indexes took a hit. The Dow Jones dropped nearly 1%, the S&P 500 slid over 1.3%, and the Nasdaq fell even harder, down close to 1.6%. The Russell 2000 wasn't spared either, shedding more than 2%. What's spooking investors? A perfect storm of a disappointing jobs report and surging oil prices due to escalating conflict in the Middle East. The VIX, often called the fear gauge, spiked over 24%, signaling heightened volatility. For long-term investors like us, this is a reminder to stay grounded. Short-term turbulence often creates buying opportunities if you've got a solid plan. Now let's zoom into the big economic news of the day. The February jobs report was a shocker, with the U.S. economy losing 92,000 jobs, way below expectations of a 50,000 gain. Unemployment ticked up to 4.4%, and this has sparked serious debate at the Fed. Some governors, like Stephen Moran, are pushing for more rate cuts, arguing monetary policy is too tight. Others, like Boston Fed's Susan Collins, want to hold steady for now. Meanwhile, rising energy prices are adding fuel to the fire, pulling the central bank in opposite directions. For us long-term folks, this could mean more uncertainty around interest rates in the medium term. So keep an eye on how this plays out for sectors sensitive to borrowing costs. Let's pivot to what's happening with oil and geopolitical tensions, because this is a major driver today. Crude oil prices soared to multi-year highs, hitting around $90 a barrel as conflict involving Iran intensifies. This has rattled markets, with fears of supply disruptions through key shipping lanes like the Strait of Hormuz. Stocks are feeling the heat. Major indexes are down, partly because of this energy shock. As long-term investors, spikes like these can signal inflationary pressures ahead, so consider how this might impact your portfolio's exposure to energy and consumer staples over the next few quarters. On the brighter side, let's check out some of today's large-cap gainers. Energy stocks were in the spotlight with the oil surge. Petrobras and Equinor both jumped over 5%, riding the wave of higher crude prices. Meanwhile, Marvell Technology stole the show with a massive 18% gain, likely fueled by strong quarterly results and optimism in the tech space. For us, these short-term pops in energy could be a chance to reassess if you're underweighted in the sector, especially with long-term demand trends still in play. But not everyone's celebrating. On the losing end, semiconductor stocks took a beating. Micron Technology dropped nearly 7%, and Lam Research wasn't far behind with a similar decline. Applied Materials and Intel also saw significant pullbacks. This could be tied to broader market fears around economic slowdowns post-jobs data. As long-term investors, dips in quality tech names might be worth watching. Think about whether these are temporary setbacks or signs of deeper challenges. Looking at the most active stocks, Nvidia continues to dominate trading volume despite a 3% dip today, showing how much attention it still commands. Palantir, on the other hand, edged up nearly 3%, reflecting ongoing investor interest in AI-driven plays. Intel also saw heavy trading but couldn't escape the broader tech sell-off. These high-volume names often signal where sentiment is strongest, something to track for potential entry or exit points in your long-term holdings. Shifting gears to earnings, it's a busy week with some big names reporting. Costco Wholesale and BJ's Wholesale Club are on deck, and investors will be watching for consumer spending trends in this uncertain economic climate. Kroger also reports, and after a 3.5% gain today, there's optimism around its performance. Marvell Technology already crushed it with strong results, contributing to that huge jump we mentioned. These reports give us a pulse on key sectors, retail and tech especially, so they're critical for gauging broader economic health over the long haul. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these results. Let's take a quick look at the top large-cap performers over the past week. Garmin led the pack with a stunning 21% gain, while Lumentum Holdings and AppLovin both climbed over 14%. Shopify and Occidental Petroleum also posted double-digit gains, showing strength in tech and energy. These weekly movers highlight where momentum is building, something to consider if you're looking to rotate into stronger sectors for the long term. On the flip side, some big names struggled this week. Genuine Parts Company tanked over 20% and Rivian 14% as EV concerns linger. Blue Owl Capital and Okta also saw significant declines, reflecting broader sector pressures. For us, these drops could be noise or a signal to dig deeper into fundamentals before making any long-term moves. Wrapping up with sector performance over the past week, industrials topped the list with a 2.1% gain, followed by consumer cyclical at 1.6%. Energy, despite today's oil surge, was up over 4% for the week, showing how geopolitical events are shaping returns. These sector trends are worth noting for long-term portfolio balance. Energy's strength could be a hedge against inflation risks. On the weaker end, healthcare lagged with a 0.6% drop, and utilities and financial services also dipped slightly. These underperformers might reflect broader economic fears from the jobs data, but they could also present contrarian opportunities if you believe in their long-term stability. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate these choppy waters. Make sure to stay engaged with our daily summaries and dive into our SWOT analyses for deeper insights on specific stocks and sectors. We're here to keep you informed and ahead of the game. See you tomorrow for more market action.